Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Bond markets on edge. Traders bracing for a potentially pivotal US inflation report that could upend bets on a series of Fed cuts. In Europe, the ECB is set to keep rates on hold today. Poland urging NATO allies to supply more air defence systems after a Russian drone incursion. The EU vows to ramp up sanctions on Moscow. And conservative activist and Donald Trump ally Charlie Kirk has been shot dead. Kirk was credited with energizing America's youth vote, paving the way for the president's return to the White House. Good morning. So the market focus after producer prices and wholesale prices in the US came in softer than expected. Now switches, of course, to the CPI print consumer prices out later today in the US as markets continue to fully price in a 25 basis point cut from the Fed, of course, on September the 17th. But it's beyond September now that the markets are looking and what the inflation data of today does to the cadence of potential cuts going forward beyond September. That I think is probably important for investors. European futures currently pointing a little softer by 0.1%. It was a flat close for European stocks yesterday, but it was another record high for the US markets, for the S&P 500, powered once again by the tech story with Oracle front and centre. FTSE 100 futures looking to add 14 points. S&P futures then, after that fresh record, 3 straight days of gains for US stocks, currently pointing higher just by a smidge. Flat, range bound, maybe until we get more clarity in terms of the inflation story out of the US. Nasdaq 100 futures looking to add just 5 points. Let's flip the board and have a look cross-asset then. You could see some movements, of course, across the Treasury curve on the back of the inflation data today. Relatively stable so far in the session. 404 on the benchmark US 10-year. Euro-dollar at 116. Marginally higher for the single currency. Brent at $67 a barrel. And gold, which got a lift again on the softer inflation story, the producer prices yesterday, currently near those records, still near those record highs for the yellow metal, but down in the session today by 0.3% at $3,630 per troy ounce. Let's cross over to Asia right now to check in on how the markets there are faring. Asian equities, of course, in focus. Our reporter, Winnie Su, standing by. Winnie.
Yeah, we're seeing Asia market pretty flat today, especially seeing a bit of a cautious optimism ahead of the U.S. CPI data. And remember, that's really coming off 5 straight days of gains, and we see the MSCI Asia now hovering still around that record high levels. Now, let's take a look at the Hong Kong shares, actually erasing a bit of the earlier losses when it comes to the overall HSCEI and also the Alibaba shares. Let's take a look at the shares in Hong Kong now. Flip the board, and we can also see that there is some volatility when it comes to how Alibaba came up with that 3 billion convertible bond sales. A bit of a worry around how investors might see the ongoing competition with its peers, but more optimism around how the company is raising funds to support its AI and cloud business. And also a bit of a pressure when it comes to the drug makers, especially after the U.S. came up, the concerns around how the U.S. might come up with some restrictions around its licensing deals. And remember, those have been the key drivers for the biotech sector so far this year. Now, we look at the bright side of things. Technology shares still driving the rally here in Asia. You see the TAIEX benchmark and TSMC both extending record highs after TSMC came up with that positive surprise when it comes to its August sales. So it's really showing how the AI demand is still the overarching theme here in Asia. Look at Japan, similarly, SoftBank, Advantest also up, extending those gains. So the AI optimism continue to be the big theme we're watching in Asia here.
OK, the handover after the strength, of course, in the US with Oracle shares jumping more than 30%. Asia equities reporter Winnie Su, thank you very much indeed on the Asian markets and the focus again on tech in that region as well. Now to the macro and back to the bond story and the inflation story, of course, because bond traders are bracing for a high-stakes US inflation report that has the potential to dent their wagers on a series of deep Fed cuts. Let's bring in Bloomberg's Valerie Teitel, watching all of this very closely. Val, am I right to frame this as a question less about September the 17th and the next decision from the Fed and more about what happens next in terms of how this inflation story today ties into thinking for the Fed.
No, I think you set it up very perfectly there, Tom. It's all about how today's print can affect the dovish shift from the Fed that we're expected to get next week. Are we in for an aggressive pace of rate cuts, or are they going to proceed cautiously, cutting for the first time in 9 months, widely expected to at the meeting next week? It could be all down to the CPI print today that could tell us the path forward for that. We are expected to see core CPI holding steady year on year at 3.1%, and we are expected to see the month-on-month reading also notched to 0.3%. Those numbers aren't necessarily great when it comes to the Fed's 2% target. That is taking us further away from the Fed's 2% target, and they've been actually missing on that 2% target, Tom, for 53 consecutive months. But when it comes to the dovish shift, what could potentially disrupt it could be the handoff in between core goods and core services. We've seen core goods rise in the last month, rise in the last year, but really the worry is about tariff-induced inflation pushing it higher. However, core services, it has been on a deflationary track, but perhaps today a hot reading on core services CPI could start to play into the hands of those more hawkish on the Federal Reserve, talking about how a turnaround in core services is not something necessarily tariff-related, but can tell us that financial conditions are too loose and we shouldn't be cutting rapidly into that. With all that in mind, it's all going to be down to how the bond market takes this. Those two-year yields, ever since Powell had that dovish shift at Jackson Hole, are markedly lower, 25 basis points lower in the front end since that Jackson Hole speech from Chair Jerome Powell, who put our attention squarely on the loosening of the jobs market. It could all be down to the front end pricing today. We are currently pricing in still a 10% chance of a jumbo rate hike next week, but it would have to be a very cool CPI print and able to push that pricing further. Tom.
OK, watching the front end of the US Treasury curve then, Bloomberg's Valerie Teitel on what to expect in the preview around that inflation print later today out of the US, central, of course, for these markets. To geopolitics now, Bloomberg learning that Poland has asked allies for additional air defense systems and counter-drone technology to better protect its land from Russian incursions. The request coming after the NATO member, of course, shot down drones that crossed into its territory. For more, let's bring in Bloomberg's Oliver Crook. Ollie, will this prompt then the US to send its Patriot system to Poland? And does the US have enough to do that?
Well, listen, the United States has shown a lot of support for Poland, particularly in the last week when you had the president of Poland, the newly elected president, visiting Donald Trump. And in fact, Donald Trump pledged something that he really would probably not pledge to any other European allies, which was to potentially increase the U.S. troop presence within Poland, because, of course, there are already 10,000 troops within Poland. And we know the Trump administration wants to actually withdraw troops from Europe. But he's saying, moving the opposite direction in the case of Poland. And just to get an update in terms of what we know from these drone strikes, because we've learned a lot over the last 24 hours. You can see there, so there will be pictures of the poles that are still getting debris, picking up sort of various bits of drones that fell across Poland. We should say that some of these drones went into Poland up to 250 kilometers west of Warsaw. So this is a serious incursion. And according to the polls, there were 19 breaches, registered violations of their airspace. And for many of the commentators from Poland and from Europe to say that, this has happened from time to time, violations of Polish airspace, but the volume at which it happened, this is really something that is unprecedented, A, and B, difficult to see how it could be entirely by accident. The Russians, for their part, have given a lot of mixed commentary on this. There were some early sort of messages from some of the military personnel in Russia. Then eventually the Kremlin spokesman, Dmitry Peskov, came out and basically refused to comment on the incident. But for the Poles, as you can imagine, Tom, this really drives home the threat that exists in the east. They are calling for more Patriot defense missiles, a drone wall to sort of be assembled on the eastern flank of Poland. And of course, this is a conversation you have fairly frequently on the Baltic. But we should also say this does not stop here, Tom. We've had Donald Tusk, the Prime Minister of Poland, speaking more openly in recent months about the possibility of Poland either developing, some kind of nuclear arsenal or having access to nuclear deterrent. This is very present in the minds of the Poles and just driven home once again over the last 24 hours.
And meanwhile, Ollie, the EU has said it will ramp up sanctions. Can they do that? Will Hungary sign off on additional sanctions on Russia? And will it actually make a material difference on the battlefield?
Yeah, so this is their 19th sanction package that they're trying to work out right now. I'm trying to get through the EU. And as you say, you know, the sort of the difficulty has always been Hungary in sort of getting these, which requires unanimity. The difference that you have now is, well, the French and the Germans are really sort of spearheading, trying to get a lot more sanctions on some of the biggest Russian oil majors, Lukoil, Rosneft's targeting the shadow fleet. But as we know, Tom, this has been the sort of goal since the very beginning of the war. There has been some success, but there's really reaching diminishing returns. Where things get interesting is now you have much more active consultations between the EU and the Trump administration. As we know, the Trump administration has had very sort of little desire to coordinate with European allies in the past. That is currently happening. But as we know, sort of from over the last 24 hours, Trump himself had basically put an offer on the table to the Europeans, said, listen, EU, if you sanction China and you sanction India, you put tariffs on them for buying crude oil and fossil fuels from Russia, we will follow you into that. That is probably a little bit too rich on the risk appetite for the Europeans to follow, but at least it begins a conversation with the Trump administration in terms of how to create an architecture to constrict some of that money flowing into Russia. And to answer your second question, Tom, the question about whether or not this is going to actually hurt and this is going to actually make a difference. In the long term, yes, if they can get effective sanctions to sort of limit the money flowing into Russia. But in the short term, Tom, this is a war that Russia is very committed to. It's insulated itself well to. And so to have an immediate effect, it's going to be very hard to see how that can happen.
OK, Bloomberg's Oliver Crook, thank you for that important update and the continuing fallout, of course, of that drone incursion into Polish territory. Now, we're going to switch focus because a search is underway for the killer of US conservative activist Charlie Kirk. That's after he was shot at an event in Utah. The 31-year-old was speaking outdoors when he was killed. Kirk's shooting is the latest in a spate of political violence in the US that is drawing an outpouring of condemnation from Republicans and Democrats alike. President Trump has ordered US flags to be lowered to half-staff until Sunday evening in Kirk's honor.
It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree day after day, year after year, in the most hateful and despicable way possible.
Well, for the latest, let's bring in Bloomberg's Balazs Pence. Balazs, explain to us why Charlie Kirk was so central to the ecosystem of President Trump, why he was a political player.
Well, good morning. As we saw, he was very important to the president, and there was a personal side to it. They were personally close. Charlie Kirk was friends with several people within Trump's orbit, within his closer circle, really. But he was also a very effective political operator. And in that role, he was able to connect the president's message with a lot of young people in America. He was only 31 years old when he was killed, but he has been active in politics since he was a teenager. He started Turning Point USA when he was 19 years old. And that organization has become a very important way of taking the president's message to young people in America. It had a very important turnout, the vote operation, and it has also become a very powerful lobbying organization as well. And let's not forget, Charlie Kirk was a very key face of the MAGA movement when it came to its online presence, when it came to social media. He was famous for exactly the type of events that happened when he was killed, where he would debate people from the other side of the political spectrum. He was known to be a firebrand, someone who was very pugnacious, which of course made for great social media content and was a way for the president to connect with what has become a very important demographic in his voter base.
OK, Bloomberg's Balazs Pence, thank you very much indeed for that update and the context as well. A story we will continue, of course, to follow, and the fallout as well, the political reaction. Here's what else to think about in the day ahead then for you to mark on your calendars. 9 a.m. UK time, we will get the IEA oil market reports. Oil prices down a little in the session today, but through the week they've been higher, of course, on some of the geopolitical tensions. At 1:15 p.m. UK time, it is the ECB rate decision. Not expected, of course, to make any moves. Rates are at 2%. But is any sense we get in terms of the path forward? Anything they say about political risk in France as well could be an interesting from the ECB. We have, of course, Lizzie Burden on the ground in Frankfurt for us. And at 1:30 p.m. UK time, it is the data point of the day. It's CPI, consumer prices and inflation out of the US. To what extent does it shape market views on the Fed steps, arguably post September the 17th? Or does it reinforce maybe the needs for a bigger cut? And you can get a roundup of the stories, of course, you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to D8YB Go on the terminal. Coming up, leaders of Gulf nations question the value of American security guarantees after Israel's strike on a Hamas meeting in Qatar. We will discuss the implications of the airstrike on Doha, plus the CEO of Cusp.AI talked to us about the future of material discovery using AI after the startup secured $100 million in funding. They have the backing of names like Jan LeCun, Jeffrey Hinton, and investment support from the likes of NVIDIA. That exclusive conversation later in the show. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Qatar has strongly condemned what it described as the reckless statements made by Israeli Prime Minister Benjamin Netanyahu regarding the country's hosting of the Hamas office. In a video statement, Netanyahu signaled more strikes on Hamas targets could be coming, threatening all nations who harbour what he described as terrorists. The attack has drawn a strong response from the leader of Saudi Arabia.
We reject and condemn the assaults by the Israeli occupation authority in the region, the latest of which is the brutal aggression against the sister state of Qatar. This attack demands an Arab, Islamic, and international response.
OK, and that comment, of course, from the leader of Saudi Arabia, significant given the tensions, historical tensions between Qatar and Saudi Arabia. Let's bring in Jumana Pasechi right now, our anchor in Dubai. Jumana, a strong criticism then from Qatar and some of their neighbours in response to Israel's justification for this attack.
A market deterioration on all fronts vis-a-vis the relationship and the approach that these GCC nations have vis-a-vis Israel, and also, I should say, with the U.S. as well, the United States. But let me just start on the first point. Yesterday, you mentioned in the introduction that the Israeli Prime Minister put out a video statement saying that Hamas officials could be targeted on any country, anywhere, signaling that more strikes could be forthcoming. So obviously, this is a statement of major concern to other countries that have also been acting as mediators with these ceasefire discussions, not just exclusive to Qatar, but also the likes of Egypt, and also, I should say, NATO member Turkey as well, keeping a close eye on the information that's coming through from Israel. So the reaction to that, once again, was quite irate out of the Qatari PM. He also then put out a statement saying that what the Israeli Prime Minister said was reckless, and that Netanyahu should have been fully aware when Hamas took office in Qatar back in 2011-2012 that it was done under with the implicit support of both the United States and Israel, because there was a perception that there needed to be an anchor country in the region that could lead some of these mediation talks and that was going to move them. And that back then, obviously, that was the concern out of the realm of Iranian influence. So that was the historical context to all of it. But then you fast forward to today, and the setup is very different. And I think many countries around the region, our colleague Sam Darid put out a report on this on the terminal, are questioning the value of these U.S. security guarantees, not least because Qatar is home to the headquarters of CENTCOM, the largest airbase in the region. President Trump said he was not given advance enough notice in order to preempt the attack or give Qatar notification that an attack was forthcoming. But many of the countries in this region are actually reevaluating the strong ties that they have with the United States, especially when it comes to security guarantees, and perhaps may have to reconsider some of them and even look eastward to deepen relations.
OK, the broader significance of this attack. Germana Besetchi, anchor, of course, of Horizons Middle East and Africa. Thank you for that context, Germana. Now, to Mexico and the trade tensions with China this time, planning Mexico to impose tariffs of as much as 50% on cars and other products made by China and several Asian exporters. The move would align the country more closely with the US as President Claudia Sheinbaum prepares for talks over North America's free trade deal. Coming up, to hold or not to hold? I think we have the answer. Will the ECB defy expectations and not leave rates unchanged today? That seems highly unlikely. We preview the decision next. This is Bloomberg. The European Central Bank is expected to leave interest rates on hold at their meeting today. This as policymakers look for evidence the economy can endure President Trump's tariffs and, of course, renewed political turmoil in France. For more, let's bring in Bloomberg's Lizzie Burden, who is on the ground for us in Frankfurt. Lizzie, what are you going to be watching for? What are the factors the ECB board are weighing up? And to what extent is France potentially a fly in the ointment for the ECB?
Well, as you say, Tom, an uncontentious hold expected today. That is because the Governing Council is really waiting for clarity on the economic impact of Donald Trump's trade war. And the recent economic data has done a lot to quieten the concerns of the doves on the Governing Council. You've got inflation at 2.1%, an upside surprise for GDP in the second quarter, unemployment at historic lows. As Christine Lagarde puts it, the euro area economy is in a good place. And that is why markets are pricing less than a 1 in 3 chance of another cut by December. The excitement, if you could call it that, might come from the updated forecast, because this is the first batch since Washington and Brussels struck their trade deal, and 15% tariffs is halfway between the base scenario that the ECB saw and the severe scenario. So yes, it may alleviate the uncertainty to have a trade deal at all, but the tariffs are still likely to weigh on demand. So you could see in the near term the forecast revised higher for growth and inflation, but downwards in the longer term. Now, you mentioned France. I am sure this is going to come up in the press conference because, of course, Christine Lagarde once upon a time was the French finance minister. Would the ECB intervene if the oats bunch spread were to widen? I'm sure her answer is going to be it's not for her to comment on the individual politics of a member state, and indeed they should all be fiscally responsible anyway. But the way that this could also be asked in the press conference is about the impact via the euro, because, of course, the single currency's managed to mostly shrug off French politics so far, but it's climbing towards $1.20 also because of this expected divergence between the ECB and the Fed. And what's interesting, apart from the fact that that could be on the deflationary side of the ledger, is that while I'm here in Frankfurt, Tom, we've got US CPI dropping right between the ECB decision and the press conference, and that could do more to move the euro than this decision here today.
Lizzie Burden, thank you very much indeed. On the ground for us in Frankfurt, giving the context as well, tying it into the inflation data of the US, 117, just shy of 117 on euro dollar right now. Now, Peter Mandelson, the UK's ambassador to Washington, has been answering questions about his friendship with the late sex offender Jeffrey Epstein after the publication this week of a 2003 birthday book in which Mandelson called Epstein his, quote, best pal. Bloomberg News has obtained more than 100 previously unreported emails between the two men, casting new light on their relationship and showing that it was deeper than previously known. Mandelson has yet to respond to questions sent by Bloomberg. This is the Bloomberg Big Take. It is very much worth your time on Bloomberg.com and on the terminal. Coming up, bond investors bet on a cut from the Fed and that hold, of course, from the ECB. We speak to MSF Investment Management's fixed income CIO. That is next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Bond markets on edge. Traders brace for a potentially pivotal US inflation report that could upend bets on a series of Fed cuts. In Europe, the ECB is set to keep rates on hold today. Poland urging NATO allies to supply more air defense systems after a Russian drone incursion. The EU vowing to ramp up sanctions on Moscow. And conservative activist and Donald Trump ally Charlie Kirk has been shot dead. Kirk was credited with energizing America's youth vote, paving the way for the president's return to the White House. OK, let's get to the markets right now. Equity markets in something of a holding pattern. You can say the same thing about US Treasuries as well. In the lead up to consumer prices later today out of the US, producer prices coming in a little softer than had been expecting and reinforcing those expectations that the Fed will go, of course, on September the 17th with its first cut of the year. How far, though? Is 50 basis points potentially something that is in the cards for the Fed at that decision? European futures pointing very modestly higher after a flat close yesterday. FTSE 100 futures pointed to gains of 18 points. S&P futures largely unchanged after another record high. 3 straight days of gains for US stocks right now. It was the tech story back in focus with a more than 30% surge in the price, or at least the stock, of Oracle. Nasdaq 100 futures currently flat as well. Let's split the board and look cross assets. US Treasuries largely unchanged in the session. There's been a lot of work done at the front end of the curve with yields down, of course, on the 2-year. 405 right now on the 10-year. Euro dollar at 116, just shy of 117. Brent a little softer on oil prices, down 0.3%, and gold as well, down 0.3%, but still near those record highs. Let's get a closer view and a deep dive in terms of how to think about the Fed, about inflation data, the ECB, and how to position when it comes to fixed income, and bring in Pilar Gomez-Bravo, Co-Chief Investment Officer for Fixed Income at MFS Investment Management, joining us bright and early around the desk. Pilar, thank you for joining us. I want to start on the inflation story of the US. We had the producer prices coming in softer than many had expected yesterday. Today, of course, CPI. What is your take in terms of whether or not inflation is the element that constrains what many expect to see as a more dovish Fed in the months and quarters ahead?
Yes, hi. It actually is still a factor. I think that we've stopped talking as much about inflation because the focus has been on labor and the payroll number and obviously the revisions. But the reality is I think that we're underestimating how much inflation still matters for the Fed. And maybe that is an argument for a more gradual approach to cutting rates. A lot is already priced in. We do expect a cut. I think that's priced in by the markets as well. I think the question around the 50 basis points, however, does depend on inflation. The path for a 50 basis point cut in September would be really driven if you do see the leeway from inflation print that is mild.
What kind of inflation print would you need to get to lock in 50 basis points?
I mean, I think if you get something closer to a 0.2 instead of a 0.35, which is kind of what's consensus, maybe that gives, together with the labor number, something that would point to that. I mean, I think that we have a great research team. And I think when we went through our macro-micro meeting yesterday, when we heard from all the analysts that talked to all these companies, there wasn't a semblance that they were going to be significantly increasing pricing across a multitude of sectors. They're going to mitigate the improvement of tariffs. So it's not a done deal that we're going to see a huge increase in inflation as a result of tariffs. However, the threat is there, and it's fair for the Fed to tread lightly, despite the political interference that they're obviously subject to. And therefore, I think that, two cuts from the Fed this year is fair. 3 are priced in. Yeah. And a lot will depend on inflation because we know the labor numbers are getting weaker. And there's no firing, but there's no job hirings either. So we're kind of in a stagnant place in terms of labor. OK, so 2 cuts this year would be fair. Markets pricing in 3. How do you want to be positioning along the curve then? Is the 2-year still looking attractive, or is the opportunity there closed? I mean, I think 2 years across the world are pretty stretched. Right. They've already kind of priced in most of what the central banks could do, including the ECB, which we'll talk about. So I don't think that unless you get a really kind of calamitous print from labor, going forward over the next couple of months, you're going to see a bad one in October, unless you see, obviously, inflation much weaker, that it would justify much more aggressive pricing in the near term for Fed cuts. Fed's cuts priced are right around 3% terminal. We'll see if we go below that. But to go below that, you need to be much closer to recession. And we just don't see in the next 6 to 12 months a significant risk of recession unless there is obviously a much more uncertain environment due to administration policies.
No ECB change expected today. In fact, markets are not fully pricing in another 25 basis points between now and July of next year. What do you think pulls the ECB off the sidelines? Are they done? Can they claim victory? Or is there something, whether it's tariffs or France, that pulls them back in?
Yeah, I mean, I think it's still a tricky situation. I think clearly the consensus is for no cuts, and therefore it seems a little bit more boring than the U.S. However, I think the tilt is going to continue to be mildly dovish, mainly because we still don't know yet some of these effects around tariffs and uncertainty and how that's impacting. There is no strong demand pull that we're sort of seeing from domestic consumption in Europe yet. But again, at the end of the day, they can't claim victory around inflation. I think that we're going to sort of see an up tilt in sort of those inflation forecasts to a 2%, so they're not going to be anchoring lower. I do think that there is potentially a case for an insurance cut in December, just to make sure that you're leaving the economy in the best position possible, given some of these uncertainties. But with fiscal next year in Germany, with the strong euro, but potentially the U.S. cutting rates and therefore, competing around the inflationary impact of that, I think that probably the market will start pricing hikes next year.
What do you do? Hikes next year being priced for the ECB. Interesting. As we think about,
the market will start pricing at the end of next year. Hikes coming.
Okay. Yes, hikes coming at the end of next year potentially, and that could be the pricing mechanism for the markets. When we think about what do you do with France, with yields on the 10-year getting close to, in some instances, topping, at least at one point this week, topping those of BTPs over in Italy. Is there a buying opportunity in France? How are you looking at France right now?
I mean, we're underweight France, and we follow the advice of our strategists there and agree. And frankly, I think a lot of people are underweight France, so I'm not quite sure that there's a huge amount that are betting contrarian-wise yet there. However, what we have started to do is cover that underweight. We're not as underweight as we used to be. I do think that the situation in France is still pretty challenging politically, and the fiscal situation in particular. But I also think that at some point there are mechanisms to sort of rein in, just given the importance of France to the Eurozone. So there is still a path for underperformance in France for those spreads to get to 100 basis points. But for now, I think that we're in a period where we kind of know what we know. And we know that there's going to be fiscal loosening, maybe up to 5% instead of 4.6%. And again, if we go beyond that, there's still a risk. So what is the risk for France? The risk for France and for the markets in terms of the OAT Bund is if Macron resigns and leaves and calls elections early. That's the big risk. It's not so much the PM of the government.
Okay.
It's if Macron is forced to resign.
Okay, so Macron is the key risk.
Yes, that could be appending a lot of this spread negotiation. So when you look at the European curve, I mean, we are paid by our clients to commit capital with conviction.
Yeah.
There's not a lot of conviction in sort of the front end of the curve in Europe.
Okay.
Because it's fairly priced. It's really the long end where it could be interesting, but that depends on the pension reform that's being taken in
out of the Netherlands.
Yes.
We've run out of time, Pilar. Always love getting your insights. Thank you very much indeed. Pilar Gomez-Bravo, Co-Chief Investment Officer for Fixed Income at MFS Investment Management. Now, UBS CEO Sergio Ermotti has warned that Switzerland's overhaul of its bank capital requirements handicaps the competitive advantage of local banks. Let's take a listen to Sergio Ermotti speaking exclusively to our team.
We do accept that there is a necessity to fine-tune many aspects of regulation in Switzerland, but on capital, I think the requirements that are proposed are excessive, and they are not really targeted to address what happened at Credit Suisse. So we are engaged in the public debates, and in the next few quarters, we will see some outcome of the political process.
Shrinking the bank is not something that you prefer. Yeah. You know, that the franchise is Swiss-based and your global franchise gives you that competitive advantage. The reason I frame it that way is I wonder, and risking oversimplifying a complex issue here, does the regulation in some way handicap the Swiss competitiveness when it comes to banking?
Well, of course, when you have a proposal that would see our bank having to hold, 50% more capital than your competitors, then of course you would have an impact on that. But No, it's difficult for me to see a successful global organization that is very close to clients, that is very resilient and strong in terms of capital, embracing a strategy of shrinking as a good way to succeed in the future. So we are very focused to keep our global footprint.
And the message you would give to investors, clients, employees that, here there's almost on a regular basis concerns around the bank shrinking and whether or not that's fully under your control. What is the message that you're able to give at this point in time?
Well, I think that we and the board of directors and the executive board are very determined to continue to execute our successful strategy, and shrinking is not an option.
How about the headquarters, that conversation there?
No, but we want to continue to operate as a successful global bank based out of Switzerland.
The management committee and yourself wouldn't be doing the job if you weren't planning for Plan Bs or Plan Cs. And not to speculate, of course, but what are some of the worst case scenarios that have been gamed out in the event you need to start entertaining some of these options?
Well, the worst case scenario is quite clear. It's already on the table. So I think that one is a scenario that we will need to evaluate and understand, but is definitely too early to jump on commenting any potential scenario and what our responses will be. Of course, the requirements as they are very punitive and excessive, and therefore we would need to think about how to protect our shareholders and our stakeholders' interest.
Understood. And I think just to clarify that point, because in my head there are two things here. It's either you set aside more capital or the headquarter question. I know that's oversimplifying the equation here, but do I take it then that you would rather put up more capital than move the bank out of Switzerland?
No, I mean, look, our preferred option is to have a reasonable outcome of this regulatory changes that is addressing the true lessons learned from what happened at Credit Suisse, and not simplistic options. And we want to continue to operate out of Switzerland based on that kind of regime.
What's your sense of the global economy, and where do you think we will be in 6 months' time? Are we going to be better off or worse off?
Well, look, the issue is that I don't think we have seen really the true impact of tariffs playing out in the economies. Of course, when you look at Asia and China in particular, it's fairly robust. 5%, comfortably about 5% GDP is quite a strong momentum.
UBS CEO Sergio Ermotti speaking to us exclusively. Meanwhile, from one CEO to another, CEO of Citigroup telling us the US economy is resilient. She sees no signs of a recession on the horizon. Jane Fraser speaking exclusively to Bloomberg's Jumana Pasechi.
You've got to look at the collective impact of the tax policy, what's been happening with tariffs, and indeed the increasing deregulation that we're seeing. And they work together as a package. I think the most important piece for a corporate, clarity. We hate uncertainty. We like clarity. And our client base now is really starting to act with more confidence now that we've got clarity on those three fronts. So active in the capital market arena, in financing, much more active in investing, less sitting on the sidelines. And M&A has been very, very active indeed, as we talked about.
Yeah.
And on the consumer side, pretty robust spending through the summer. And we saw that really across all categories, helped a bit by lower gas prices. But the consumers being fiscally responsible, being more mindful around some spend, but still the spending levels were very pleasing.
So the momentum was pretty strong across all lines of your business in the second quarter. Of course, I don't want to precipitate the upcoming earnings, but can that momentum continue into the end of the year, just in terms of, what you're seeing in advisory, in deal making, and in trading? Because it was a very strong quarter for trading as well.
It was exceptional for us on all fronts. I still see very strong pipelines. I see high level of engagement from clients. I see a sense of urgency as well, given the speed with which industry structures are changing, and there is still growth opportunity. I think growth will be a notch lower. We're keeping an eye on the labour market. It's a low churn market. So not everything is rosy, but we don't see a recession on the horizon.
Jane Fraser, the CEO of Citigroup. Coming up, we're going to speak to the co-founder of Cusp.AI about how his company could revolutionize how materials are discovered. They just raised $100 million. That interview is next. This is Bloomberg.
I think that the key thing is we've had 20 years of private investors, employees who bought into the stock, and over time it became quite an effort to keep track of private transaction in Google Sheets, right? So now it's a little bit more efficient to trade the stock on the market. Fantastic to welcome new shareholders to the cap table who want to join what we're trying to revolutionize in retail banking. So I'm super excited about it.
All right, big day for Klarna, the Klarna CEO, of course, and the team. The Klarna CEO speaking to Bloomberg after the company's IPO in New York. The buy now, pay later firm, founded, of course, in Sweden, rose 15% in its trading debut after the company and some of its backers raised $1.37 billion in that initial public offering. Now, staying on technology, Cusp.AI is a platform that acts a bit like a search engine for novel materials. They've recently secured $100 million in a Series A funding round with backers including NVIDIA and Singapore's sovereign wealth fund. The startup has also locked in partnerships with Hyundai and Meta, amongst others. For an exclusive interview, Cusp.AI co-founder and CEO Chad Edwards joins me now. Chad, thank you for your time. And your advisory board is just this incredible brain trust. You've got John Brown, formerly BP of CEO, Martin van der Brink, formerly the president of ASML. You've got Geoffrey Hinton, the godfather of AI, alongside Jan LeCun as well. It's incredible. You've got some real talent there alongside you, of course, and your co-founder. What are you doing with this 100 million, Chad?
Thanks, Tom. Good morning. Thanks for having me on the show. Yeah, the raise is a landmark raise, not only for the company, but I think for Europe as a whole. And we've seen some really nice momentum in Europe, as just shown previously on the screen. But I think the funding round that we've just announced predominantly will be spent in three kind of core areas, one of which is on people. So many of you will be familiar with the kind of talent war that we currently find ourselves in the AI space. So people are a big cost center for us. Compute, obviously, we're training fairly large models on fairly large data sets, so the usage of GPUs through our cloud partners will be a second sink. And then third and foremost is the experimental component of our work. So, of course, we are making materials, we're designing materials, and in order to do that, you have to physically synthesize those materials. And so we have labs across the world that we're working with that actually physically make those materials for us. So they're kind of the three cost centers that we have for the funding.
Yeah, that makes sense. And Chad, to be clear, this isn't theoretical. You are putting this into practice now. Your models, and you use multiple models, you have come up with some novel materials, right? And what is the commercialization around that?
Yeah, absolutely. So in January, we kicked off a project called Project Skyvault, which was an attempt for us to go from a customer prompt, i.e. what kind of material class they were looking for with which properties, all the way through to synthesized material, and we were able to do that in just under 6 months. So those materials are now in final evaluation and testing with some of our partners in the United States. But that was kind of a first dry run through the entire platform, just to show that this isn't an academic exercise, but actually we can really go through the end-to-end process that we've described. In terms of the commercialization journey, of course, this isn't an overnight project. We're really tackling some of the world's hardest problems, and so these won't be solved overnight. And of course, getting a material to market involves a whole bunch of kind of regulatory steps that we have to follow and procedures. And so you can imagine that within the next 2 to 3 years, we hope that we'll have our first, materials in the market generating fairly significant royalties for the company.
Which sectors or parts of the economy are most likely to benefit potentially from this technology?
Yeah, I think we've built the platform in such a way that it can be applied to almost any material class. We've made a strategic decision not to apply it to biologics, so drug discovery, for example. There's an awful lot of noise and excitement in that space already, and I feel like the materials side is far more untapped, and therefore we've decided to really focus strategically there. In terms of the specific sectors, I mean, we kind of have created a portfolio of different material classes for ourselves with different partners. So impacting the likes of semiconductors, carbon capture, battery systems, hydrogen fuel cells, right the way through to water purification, where we work with one of the world's largest water chemical companies as well. So really a portfolio of different applications that we're working on.
Chad, how likely is it you can actually scale this business here in the UK?
I think it's extremely likely. I mean, every day I almost hear from investors and people around the business, hey, Chad, you're going to have to move to the US. And I'm very reluctant to do that. I think we can build generational businesses from here in Europe. And in fact, my last company in the quantum computing space is a prime example of that. And I want to do it again here with Cusp. I think obviously one of the predominant reasons that people do move to the US is the availability of capital. And with the fundraise that we have demonstrated here, we've shown that actually capital is a global topic and we can attract, with the right team and the right ambition, the right capital. So I think Europe has a really unique advantage in terms of the density of talent. And we've really attracted some of the best people into the company. And also there's a really nice concentration of good end users. So big companies like BSFs, for example, here in Europe, that are prime end users for our technology. So I'm reluctant. That being said, the US is an important market for us. And with this funding round, we will, in fact, expand into the US. But it's not like I'm going to be packing up my family and moving there anytime soon.
OK, Chad Edwards, co-founder and CEO of Cusp.AI, speaking to us exclusively on the back of that $100 million raise backed by the likes of Singapore's sovereign wealth fund, Nvidia, Samsung and Hyundai. Chad, thank you. There's a lot more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So we had producer prices coming in slightly softer than expected yesterday out of the US. The attention, of course, switching and focusing onto consumer prices later today. And the expectation is that the core, year on year, they'll roughly remain similar. But what we've been seeing is a gradual grind up in terms of the core, super core CPI, grind higher in terms of inflation and price pressure. 3.2%, 2.7%. That is the headline CPI print. So you're still, of course, well above that target for the Federal Reserve of 2%. We know the focus has shifted to the labour market and the obvious weakness there. But does the CPI print of today change the market's views in terms of the cadence of cuts beyond September? Just a bit of detail and context there as we look ahead to CPI. Let's flip the board and have a look at the story of Oracle. What an remarkable, amazing day yesterday for this stock, jumping 36, 37%, and of course significant wealth in the tens of billions to Larry Ellison himself, who at one point yesterday topped the crown of Elon Musk as the wealthiest person on the planet. That was the move that we saw yesterday. This, of course, on the back of this very aggressive outlook in terms of the pipeline and demand from their cloud unit. That company closing in on $1 trillion of market cap right now for Oracle. We're going to bring you the ECB rate decision, by the way, at 1:15 p.m. UK time, followed, of course, by President Lagarde's news conference half an hour later. Any views, of course, on the euro, any views on France will be interesting. Do not forget, the next episode of Bloomberg Tech Europe drops tomorrow, featuring exclusive interview with Demis Hassabis, the CEO of Isomorphic Labs and Google DeepMind. The opening trade is up next. This is Bloomberg.